Hello traders, good morning in the United States, hello in Europe, and good evening to our viewers in Asia. Welcome to our weekly trading show to kick off your week. Every Monday we are here on Traders Yard for you, looking for the best setups in the markets for the current week. And as always, I have my fellow friends and traders with me. At first there's Rudi Born, German asset manager living in Japan most of the year. We also have Gilbert, trader and founder of xTasyTraders and Traders Yard based in Austria.
Hi.
And of course we have my good friend Mike Seidel just joined us, who's a great portfolio manager and a trader living and working in Germany. And myself, Martin Gersch is my name. Okay, so before we kick off the show, we have to show you the risks of trading. So this is where my screen comes into play here. Let me see. We want this one. So, okay. So before we start, please read this disclaimer carefully. Trading is always a risky business. There's chances on one side, but there's also risks on the other side. And what's very, very important, as we are no financial advisors, what we are doing here today is for educational purposes only. We are not recommending any stock or security mentioned here to buy, hold, or sell it. And yeah, actually know your risks, know your time frame, act accordingly. That's very, very important. And of course, we are not analysts, we are traders, so we put our money where our mouth is, and so there's a high possibility that we own positions in the stocks we mention, or at least plan to build any position in these stocks. So always be careful about this as well. Well, then let's start directly with the first market, the first stock that I found for the current week that's interesting for me, and let me show you why it is interesting. So the first one I picked for today is Crowdstrike. Yeah, Crowdstrike actually is a cybersecurity company. What's interesting is the annual revenue. Just take a look at the growth of the revenue. They started with a little bit more than 100 million in revenue in the year 2018. And actually, in the last 12 months, they just managed to get over this 1 billion border in revenue streams. So the last quarter was really good. They had a lot of earnings in the quarter. They could continue to grow very fast, and they managed to reach more than 1 billion in revenue streams. You see in the EPS here, it's EPS beats everywhere you look. We do have strong buy and buy recommendations of several analysts, professional analysts, and here you have a small overview. 1.19 billion annual revenue over the last 12 months. What's very important is that we do have 93% of subscription revenue, because the business model of Crowdstrike is more or less completely based on subscriptions. And as you can see in the lower right corner, 64% of the customers do use more than 4 modules of Crowdstrike. So the customer number at the moment is around 11,400 customers, growing very, very fast. And we just had an analyst revision. I think it's 3 or 4 days ago, where Stifel analyst raised his price targets to $300 because he is expecting the customer number to grow from now 11,000 customers to around 100,000 customers in the next 4 years. So maybe you get an impression of how big this company could become. We have a year-on-year growth of more than 80% in terms of customers. You can see they're very good customers in using Crowdstrike. We do have 214 companies out of the Fortune 500 companies, so the biggest companies in the US, and they do serve 13 of the top 20 banks. And as you can imagine, especially for banks, cybersecurity is a very, very important thing, and I think this talks for itself, the kind of customers CrowdStrike does have. So I guess they are the number one in cybersecurity, and yeah, this is why I picked the stock from a fundamental basis. So let's just take a look at the chart, CrowdStrike. Here we have it. You can see it's quite a young company. They started to be traded at the stock exchange in mid of 2019. This is the monthly chart. You can see how much momentum there is in this stock, really going up very, very fast. I do have it here from the beginning of the year. Let's see. This is the year-to-date chart, more or less. Compared to the S&P 500, see it's much more volatile than the S&P 500. This is important to know because it's like a risk measurement. So it's a little bit risky to trade in this stock because of the high volatility. But you see from the mid of May on, the stock is brutally outperforming the S&P 500. And what we see on the weekly chart is that we made an important breakout. Here is the last weekly high at 248.50, somewhere around here. And in the last week, the stock managed to break above this last high, break above this last resistance line down here, and closed quite strong. So we had a strong weekly close, way above the 10-week moving average, so really strong. We see the RSI is picking up 64-ish somewhere at the moment, quite strong on the weekly. And what we can see here on the daily as well is this nice setup we saw over the last 3 trading days. We had this big momentum candle, like an up gap here, and buyers coming in all the day on Tuesday. And then we had 3 days of tight consolidation, and I really like these kind of setups because if the stock price manages to move above 259, there's a good possibility that we can see additional momentum and upward movements in the stock, buyers coming in again and driving the stock price higher and higher and higher. So I do have a price target near $300 US. What we could do is we could just take this last movement before the flag, before the bull flag came, and then we can just put it down here, lower end of the bull flag, and we see price target is somewhere around $300 for this continuation move for the bull flag. Gersh trend, really bullish. I like what we see on the side of the volume here. We see big volume in this last up move. We see very small volume in the consolidation. So breakout is likely to move the stock price a lot higher. When I took a look at the sector of the cybersecurity companies, I found quite a new company that's very interesting as well. That's KNBE. See, even younger than CrowdStrike. Yeah. First trading day was the 22nd of April, and we see a tight flag here as well at the moment. We do have an initial move here of 100% price move in not even 2 weeks of trading time. A lot of volume, very small volume in the correction in this high tight flag, and breakout to the upside would also propel the price a lot higher, I think. So I just wanted to show you this one as well. Very new, very volatile, very risky, but also very interesting if you can manage to go above 36.70 here. The second stock I have on deck for today is Goldman Sachs. I think everybody knows Goldman Sachs, knows what they are doing, so I do not have to talk a lot about this. What's interesting here is also rising revenue stream, going up quite strong here in 2020 and going up even stronger in 2021. Take a look at this last quarter. This was an absolutely record quarter, around 18 billion of revenues during the first quarter 2021, and actually more than 6 billion of earnings, 6 billion profits. You see big earnings beat in the last quarter here, and what's always the case if you see such big earnings beats is that the PE ratio comes down quite hard if a stock can manage to propel their earnings just as Goldman Sachs did in the last quarter. And the new PE that's a lot smaller than before is very, very likely to have the effect of rising stock prices again, because investors are buying the stock because PE is relatively low. And if you're a long-term investor and you're investing in a big company, you like it when the PE ratio is growing. Okay, so from a charting point of view, we see here the last month really strong movement beginning in November 2020. 1, 2, 3, 4, 5, 6, 7 months in a row rising prices. Actually, at the moment, the stock is underwater for this month, but we had the big stress test of the Federal Reserve Bank in the last week. And actually, the Fed told that each and every one of the 23 top banks in the US managed to pass this test absolutely phenomenal with fantastic results. So there wouldn't be any problem for the banks even if the US will enter a big recession. And I think what they are checking with this stress test is how would the banks react to a market condition where the stock indices correct around 50%, so there are 50% losses in the stock market, and we do have an unemployment rate in the US of around 10% in this time. So this is what the Fed is checking. How would the banks react in such a surrounding? They said the banks would all be doing great even in such a bad surrounding. So this was quite good for all the banks that were in correction territory here since the beginning of June. All the big banks came down, no matter if you take a look at Goldman Sachs, JP Morgan, Morgan Stanley, all of them came down. Now in the last week, they all gained a little bit of momentum. You can see the year-to-date performance here compared to the S&P. Banks were really good, all of them, not only Goldman. But I do like Goldman because they reconquered here the 10-week moving average, very important. RSI moving strongly up again. And on the daily chart, we see the stock managed to move above the 50 moving average, stays above the 50 moving average for the end of the week. Several other banks didn't manage to move above this very important moving average. So this is why I prefer to trade Goldman Sachs at the moment in the bank sector. And I do have these buy signals here from one of my entry strategies. And the buy signals occurred in this pullback when the stock tested the last support level. See, last time these buy signals came in here, we got a big up move. So I'm expecting a similar move now for Goldman Sachs, at least reconquer the old highs around $394, but I guess we will pass above $400 as well. Okay, so that's it from my side for today. I have Crowdstrike and Goldman Sachs on the long side. So who's next? I think Rudi is next. Am I correct?
It should be me, yes. Just by order. Don't worry about that. So if you can hand over the screen to me, that would be wonderful. Lovely. Thanks for your insights. Really awesome. I also have two stocks for you, but it's not limited to one side. So let's check what we have. Just give me a second to switch to the screen. And I hope you can see what I'm talking about. So I'm switching off my camera so that you can follow way easier to what I'm showing to you. So it should work from now. What I have here is Church&Dwight. It's consumer goods, and you can see I'm not referring on any fundamental information or whatever it is. I'm just a chart technical guy. I'm just checking what the price movements are doing, what are the market participants are willing to pay for a price. This is the most important thing for me. I'm not counting for the numbers. I'm not a number cruncher. I know that many of you may think this is really important. It might be important. It can give the impulse to a market, but for me it's really important to have the opinion of all the market participants. Are they willing to buy? Are they looking for something? Are they eager to have something, or are they afraid of holding a position? So that is something I can see when questioning all of this, or let's check the chart. And I think here's a good idea which market movement we can expect for the next few days and following up for a longer time period. So in this case we have the weekly chart here on the upper left screen, and you can see we already had some really nice movements to the upside, and it's a long-term up move we had here. So absolutely a bull market, but now we are not in the bull market anymore. From that high level here we came down, let's say in a corrective manner. Why is it corrective? This is a typical corrective pattern. If you can see that the market is moving back and forth, this is completely different to what you can see here. If you compare this movement, this is clear one direction. It is not with any setbacks, maybe some breathers here within, but it's a strong movement into one direction, and this is exactly the opposite, not only by direction, also by the strength of the movement. You can see it takes some time. The market is moving within something like a trend channeling. Some say it's a bull flag here in this case. These are all indications that the market has a good chance that the down move is not the main trend. It's only a counter trend, and the up move is of course the main trend. And so I'm willing to follow the up move, the main trend, as soon as possible. So for that we have many ideas how to enter the market. It's not only on a weekly chart. It is, for me, for example, I'm always looking for some breaks. When the market is breaking through some intermediate highs here, this is giving me an idea that this down move might come to an end soon, and so I'm willing to invest long. But I always try to find better opportunities, better prices to enter a market, because not only to have a cheaper entry, but also to gain some better risk-reward ratios, because I can trail my stop maybe a little bit closer to the initial entry point. So this gives me a better positioning from my long position in this case. So we have a lot of indication that the market will turn. Also the oscillation, this is the Born oscillator, but you can also use the stochastics, you can use the momentum, the CCI, whatever you prefer. Most of the oscillators should, when synchronized correctly, should indicate that we are oversold. This alone is not an indication that the market will turn. Please don't trust any of what I'm talking to you today alone. Just combine as many of these. Hopefully mostly of them are really, really different. For example, this indication does not have anything to do with this breaking through this level here, for example. This is a chart technical line. This is an indication from an indicator. So you can see these are completely different approaches to think of a turning market in this case. I mentioned the synchronization part. Just try, if you like to use something like an indicator, try to synchronize a little bit as good as possible to synchronize the indicator to the chart as long as it's nearly in the same synchronization, the same speed, then it's okay. But if it's completely off, for example, if you have something like this, you can see, okay, this is maybe not synchronized very well. It's too late here, especially here on the lower end. Here you can see we are half through the bull market already. Just give you an idea how to deal with this. You can do, and you should do this with all indicators, not only with this one. It is roughly to synchronize your indicator to the real chart technical situation. Don't stick with these numbers, stick with the synchronization. This is, I think, quite useful. But I don't want to stick too long with the weekly chart. This is just giving me an idea. Whenever we are continuing, we have to expect some breakthrough the $100 level here or even way higher. So this is the long-term perspective for this one. But I want to come to the lower time frames. For example, the daily chart, you can also see we are here over sold. This is just another idea for waiting for a long term. And we have something what I really love. This is the Fibonacci's. You can see that we have a lot of Fibonacci levels here. I drew them already. I just can give you an idea how to find these levels. You can just draw from the lowest level to the highest level, and you have some of these levels. And you can see it's not given that the market will turn, but very often around these levels the market turns. But please, also in this case, don't trust a single line. Even my beloved Fibonacci's are not able to predict the perfect lowest points here. But if you can combine them, for example, not only the Fibonacci retracement, but together, for example, with the Fibonacci extensions, and you can see, hey, we have two lines here quite sticky together in a very tight area here, and even more of them, some from the movements here in between. You can see this is a rock solid support level, which can be broken anyway. But if the market is turning around this level, this is a clear indication that the market is not willing to push through directly. And we have another situation here. For in this case, I have, for example, the super trend. You can also use something like an let's say some moving averages or some the parabolics, for example. It is a question, for example, for in this case a trend following indicator. Some people are trying to get entries predicting a new market direction by a trend follower, but this is not working very well because trend followers are always coming with the trend, but you never know in advance that a new trend will come after another trend ends, the old trend ends. It would be too easy. The math behind all these indicators are not working in favor to predicting what the future brings. It only says the old thing is over. That's the meaning of a trend follower. But in this case, we are not looking for an answer to enter a long position because of this. This is only telling us that the downtrend might have come to an end. Okay, what does it mean? The downtrend might have come to an end. Whatever will follow, we don't know that by the meaning of the indicator. But this in the wake of a pushback from a support level here in this case, in the wake of the chart technical pattern, the stronger move, even in this case, the stronger move was the uptrend, the weaker move was the downtrend. We have a good opportunity to think of a rising market, not only a little bit from this pattern here, the same size like this one here. It might be the start of also a next big bull move, which can lead us through the $100 level and way higher. It's not given how far it will be, but wherever I'm entering here, I'm not too much in bad mood that the market have a good opportunity for long perspective movements to the upside. You can, of course, take profits in between if you don't want to stick too long with one position. but I think this can be a very good start. The good thing is here, if you enter the position at, I think right now, because we are exactly at this level, you can enter at the very moment when the market is opening today, or you can wait for another break through this level. And when the market is going above that, you can say, okay, whatever happens, I just don't want to see the market going below this point here, because this would indicate, no, we are not at the end. So our risk is this price difference here. And our reward should be something above this level, but not only above this level. If it's above this level, we are triggering on this big time frame above this level as well. So we have a really, really good risk-reward ratio by, let's say, $2 on this side, and let's say $15 or $20 at minimum on the upper side. Of course, it's never a 100% chance that this will not stop out us, but the chances are very good that we are at a very early stage of a turning market here in this case. The second I want to introduce to you is a really easy one, and after this long position, I also want to recommend to not only to focus on one market side, to be open for the other side as well, because sometimes the market is turning around, and if you're long with all positions, it might be really useful to have some shorts in play as well. In this case, it's Intuit. You can see it here on the left part here. It's a technology and software company, and you can see we have something like a blue bar here, or we call it a born bar. So this is giving us always opportunities for a fast following up. So whenever we see this, the next move should be quite fast. Not always this is the case. Sometimes the direction is unclear. You need to have two trades maybe to have the best out of it. But very, very often you have a really strong move following up after this one. So this is what we are thinking of this in this situation here. Whenever the market is, I'm zooming this up for you a little bit. Whenever the market is pushing through the upper side here, this is our long idea, to follow up with a long. You can take profits like we do. We are only targeting here the very next target here. This is exactly the same length like the last trading day in this situation. It's a really easy one, to be honest. It's a 2.5 to 1 risk-reward ratio here. So even if you have a second approach, you need a second trade to do this. For example, you are stopped in on the lower end and stopped out while the market is turning. You have the second chance for the other side. So we are not focusing on one side. We are focusing on the coming up high potential fast movement we can expect in this situation. So in this case, when the market is going through the Friday's chart here to the north side, we would take a long position with minimum target here. We are taking profit at these levels here typically. Some people, some followers of us, they like to keep half of the position and trailing the stop even further. So they have a chance of a really, really long movement here, in this case to the upside. The initial stop for the long side is the red area here. It's the 38.2 Fibonacci level. It's not a secret number or something. It's just really easy to apply. To be honest, this trading approach is not having a crystal ball or something like this and knowing everything better. It is more or less having a small advantage in probability, but a very nice risk-reward ratio, and that's what we love with this. And we are not fixed on one or focused on one side only with the bull market. Whatever the market is doing, when the market is breaking through the north, we are with the long guys. When the market is breaking through the south end, we will be short. So this is very nice, a very nice add up for our portfolio to be not focused on one side and being surprised when the market is turning around. We have something here in the market we can use for the other direction as well. You can see it's easy as well. It's really simple to follow things like this. And you can, of course, you can build up your own trading ideas like this, but be open, not to focus too much on one direction. I think this is really important, but to trade what the market is giving you. I think this is one of the best things you can do. So these are my two trade ideas for today, for this week. Intuit and Church&Dwight. Maybe you can follow the idea. Maybe you can find your own situations like this. And I hope and the best for you, and crossing my fingers for your trading ideas. But we have some more to come. I think Gilbert, it's you. You're the next, right?
Right. Just switching on my stuff here. Yeah, many thanks, Rudiger. Interesting stuff you just presented. Yeah, I'm just taking over now. And yeah, what is on my list today? I have 2 stocks in my pocket. I'm just sharing my screen. Give me a second. I have it now. Make to presenter. Okay, so
Awesome.
now it's here. I think you should see my screen already. Yes, I'm here. So yeah, good. So what do I have in the pocket today? This is Google and EOG. I'm starting with Google. I mean, I think everybody knows Alphabet, Google. I still do not understand why they call them Alphabet. It's such a boring name. Google is much more interesting. Yes, but anyway, Google is a big company, multinational company in advertising, search engine, cloud computing, software, hardware, and everything like this. So they are, of course, everybody knows we are almost depending from Google. And yeah, they are, if you look at the annual revenues, they are doing amazing. So in 2017, they were at about 110 billion US dollars. Now into 2020, they are already at 180 billion US dollars. Their revenues are about 40 billion US dollars a year. You also see the quarterly rise of the revenues, and also the earnings are extremely gaining, and yeah, in this last year more or less. Also the consensus, they are always above, they beat the consensus quite much, and the recommendations are quite strong. So currently there are 13 strong buys, 25 buys, and 5 holds, so not any single sell recommendation. Yeah, so this is bullish, bullish, bullish. And why I picked it today, just switching off my cam. So, okay, good. Yeah, starting always at the monthly level, we see Google is doing quite well since quite a long time. We see here, this was the pandemic crash here. It was not really a crash for them. And from this moment on now, Google is high flying, up, up, up. What I also see here on the monthly chart is that we had here a very strong candle. There was a small correction in the last month, but this got just completely rejected. So the market went back here, but immediately in the same month just came back to the previous levels here, and we already, Google already beat the previous highs of this candle here. So this is the monthly chart. Of course, I mean, climatic distance, this is just not the usual case. Looking back into the history, but it is like it is currently. So all the tech stocks are high flying and are far away from this midpoint, basically the SMA 220 on the monthly base, and this yes, builds up quite some tension currently. But yes, it's rejected. This tension is not existent here, and all the good stocks are just high flying, skyrocketing. Good. Let's get into the weekly chart. What do I see in the weekly chart here? Yeah, so some location point lines are here in the past, so it's reacting somehow, but it's not that pretty stock for location points as I'm basically would like to see them. But yes, so they are not really following this SMA 8. But anyway, here we have a strong up move, a correction back here, very clean retracement, double bar retracement at the SMA 8, and now the market is going up here. We, not to forget, we have here the previous high at this moment, and it seems it's already being hit and broken. Coming to the daily chart, of course, there the idea, I'm always looking into the higher time frames, how they are looking like, what is the potential, but the daily chart should always give me the entry. And what I see here is that market, just the last move, went up here, corrected back also to the SMA 20, jumped out of the SMA 20. Here, of course, we have previous highs. There we are somehow in resistance with Google. And a little bit here. So, okay. And yeah, so we got a little bit rejected, but what I see here is this candle, last one, that it's coming out of the SMA 8, and we have a nice single bar retracement. So this would mean that this is a good entry here. Taking, for example, this as the entry, so as location point always says, okay, it should be above the entry candle or the signal candle, and should be slightly below, the stop should be slightly below the low of the candle in case of a bullish scenario. So where could this go? Of course, if you really would get confirmation of this, you also could wait here until this previous highs got hit and broken. Of course, you see it immediately on the risks that, for example, here, the closer you are, the smaller the risk is, but the higher the profit can be, but it's not that much here in this case. So where could it go? This is, if you look into the past with Google, it's quite interesting. So if you draw a line, you see here these waves going up. Here there's a wave, there is a wave, there's another wave. So, and if you measure them, so if you measure them, so here we are basically on this high. If you measure them here from this relative low to this, it's approximately the same distance. Here also approximately the same distance to get to the next high. So we also could do it from here into this, basically from this relative low, and this could be a good point, a good target currently for Google. It's not that much, but of course, if you see it, if you're really getting in tight, there is quite about 7 hours, which could be even from this short distance, which could be taken out of the market. So this could be a good target for Google. Currently, the market is bullish. Everything is just skyrocketing, and of course, Google could also follow this trend, even if we are completely climatic here. Okay, so this is the first one. The second one is EOG. So EOG is an energy company, basically an oil company which is based in Houston, and you might know it originally it stood for Enron Oil and Gas. To be honest, currently the annual revenues are not that pretty, but of course we have a hard year in the past, so not too much traveling. Airplanes got stuck, the whole traffic got stuck, so of course this was beating all these oil companies quite hard. But if you look at the quarterly revenues, they are quite increasing steadily now, and they are also getting back into the earnings getting back into the positive, quite good. The consensus is not that much in the past, but of course, you know, there is, as I mentioned, had problems, of course, making the revenues, but the recommendations are, and this is quite good now that we have no sell recommendations. There are 14 holds, 11 buys, and the strong buys are quite increasing from 5 to 10 from the last month even. Okay, so why did it get onto my list here? EOG. Again, let's get into the monthly chart. Yeah, we see here a downfall for some months back here, but what I like here is there was a nice double bottom where the market came out and jumped up into the north again. We need to be careful because at this point here we had some resistance. There is also some resistance here, and the next resistances are at that level. Let's go into the weekly chart because there is maybe the climatic distance. So yeah, they were quite underperforming. So the climatic distance went into the other directions, into the negative direction. Market went up, went through it. Now we are slightly in the overheated phase, but not too much. And if they're doing good, of course, this is not really a indication that it needs to get back. So this, of course, can follow this trend. It's just an indication that it's in the average. We are not really in the zone, in the neutral zone of the movements. Okay, let's go into the weekly, and this is why I like it. Basically, this symbol. Yeah, we see here the down phase. We see here the double bottom. Market goes up here. It's reacting quite nice at the location points. There is also a reaction at the EMA 130 where the market got back and jumped out here. And this is, for me, this phase is interesting because there is the SMA 200 on a weekly base. It did not get rejected here, so this candle, the last candle, came out of the SMA 8, jumped over, and is just about breaking the previous highs. So we are here on a very strong resistance. If it really wouldn't be a resistance, that the SMA 200 is a resistance all the time. And yes, but here it seems the stock went through. Let's get to the daily chart. Why is it interesting for me? Yep, market went up. Here, back to the SMA 20, jumped out, came back. Here we have the SMA 8 of the weekly and moved up, and this is the weekly SMA 200. Currently, show it a little bit bigger, is market went up, came here on into the resistance of the previous highs, correction back to the SMA 20, and just got back out of the SMA 20. So there is here now a good entry possibility. Like this, where we could take the previous low. Of course, it would have been ideal to find this already, but since we are one day later already, and this is also that it seems the market is really hitting or breaking these previous highs, so this is also a possibility to get in here. So at around $1,000 risk, and as mentioned, here is the next target or the next resistance zone, so there could be a possibility to get into this area with EOG out of this setup here. So basically the entry level could be 87, 88, something like this, and the stop level should be around here at 84. Yes, 84. Yeah, exactly. Yeah. So my two setups for today, and I would say, Mike, take over.
Yes, it's on me. Thank you, Gilbert. Nice job, guys.
Welcome.
Very interesting setups for the day. Let's just switch on my camera. You should see me now and hand over the monitor to me. I'm not able to do this. Gilbert, are you able to bring the monitor to my side?
Yes, I will. Give me a second.
Right.
Okay, you are
Awesome.
organizer. Yes, first organize. So where's my mouse? So then I'll make you to presenter as well. Yep.
Yes. Here we go. Yes, all right. From my side, at first, hello together, and sorry for being late in the start. I had some technical issues with the link, but now I'm here, and we can talk about some interesting trading ideas. I have to say for today, it was a bit struggling for me to find setups that are valid for the day because of I'm especially for the stock markets, I'm a trader who like to trade in the long direction. That means I'm always looking for trades where I can profit from increasing prices. And especially today, I got some symbols that indicated me the option, but the location in the charts was not the best. So they are very, very high on the tops, and it was looking like a topping situation. And when we have a look to the indices are quite strong at the moment, but they might need a break for a few days. And for this reason, it wasn't able for me to find a sexy setup. So for this one, I'm thinking about to talk about with you for some special setups for the future for your watch list. And what I have in mind came in me through a situation in a hardware shop. I was looking for wood, and it was out of stock. So it was a few weeks ago, and I was wondering what's happened. At this situation, I was looking to the chart of lumber, and this is what we want to do now. Let me please share my screen with you. Just check this. So now you should see the chart of lumber. Switch off my camera so you have the full screen of lumber, so I hope. And you can see what's happened. Lumber is very important for our future, but the pest infestation and delivery chain interruptions, brought the price for the lumber in this crazy situation that we had here in March 2020. You could buy lumber for around about $275, and now in the high peak you had to pay $1,730. This is so crazy, but you see here this sharp correction, and this is normal situation over here, but you should consider wood as a construction material becomes more and more important. The reasons for this are clear. It is a very strong material supporting for constructions. You can use it for your insulation for the house, for energy saving constructions. You can use it as base material for houses, roofs, and for, of course, for the facade and for the flooring. That means you can use wood for a lot of things to build a nice house. And what's also very interesting, it matches the requirements for a greener future. It's sustainable, it's renewable, and it's a environmentally friendly construction material. And this is very, very interesting for the future too. So that means we will need wood in future too. And one of my former customers, he was a forester, he said, when I need money, I make wood. And this is quite true. And when you have wood, you can sell wood on a good demand. But at the moment, we had the situation that the chain interruption are there, and this is a thing that brought the price for lumber to a sharp correction. But what we have here in this situation, we have the location in an interesting level. It's below a strong support level, but the next one is closed. The next one is here in this area around about 640 to 660 US dollar, and this is quite interesting. And you see this chart is typical for and becoming exhausted sell-off. That means you see here week over week over week dropping prices, and you see even the gaps here in the market, and this is a situation that is not normal, and it might take a few weeks more, but we will see a recovery because of lumber is not worthless, and when you see where we are at the moment, we are below the prices of last August, and this is from the pandemic situation. It's a quite strange situation when you see the drop over here in the autumn, and then this strong rise here. Our economy is not that weak that this one is normal. That means I'm quite sure we will see more and more becoming stable prices, and this is very important to see this, to invest in companies that work with lumber, and we have 5 or 6 companies in this branch, and I have the 3 top stocks in this sector for you, and please don't laugh in the moment when I see when I tell you the top companies. This is actually ridiculous when you see charts like that, but let me check the charts with you. These 3 companies, it's West Fraser, it's Bios Cascade, and it's the 3rd one is Universe Forest Products. And all the 3 companies had a good performance in the last periods, but now they are all under pressure. But, and this is the interesting situation maybe for your trading, as soon as lumber will be stable in the prices, we will probably see a base formation in stocks like that. And when you see what's happened here, you have, for example, in West Fraser Timber, you have a support level over here round about the 67. And the last test was nice to see this jumping markets to the upside. Now it's weak again because of lumber is still weak and weak again, and it can be that we test this level a second time, and when we crash through, all right, the next support level is here round about the 62. But this is one of these pieces for your watch list, just in case we will see a situation like that we came down again, and we will turn up earlier, and before we test this level over here, you will have the chance for a new uptrend, and you have interesting targets on the way to the upside, and these targets are based with the lower trends that we have here. You see this downtrend over here, and these areas, the highs from the correction, are very interesting levels for targets when you trade the long side, and this is interesting too. Prices above the 72 will lead to a small uptrend, and you can expect higher prices, especially when the demand for wood will become and stay strong. This is very interesting. And the second stock I want to talk about, I have just 5 minutes, is UFPI. UFPI is the branch leader, absolutely. When you have a look to the numbers, just in that case, we see the numbers growing, not the best. The yearly numbers, the profit were in high for 2020, 377 per stock, in 21, 336, and in 22, 345. That means these numbers are not the best, but we have targets from the analyst side, round about nearly 100. It's round about 97 in the high, and the median is 94. And when we have a look over here, even when we go to the median to 94, we are on a new all-time high, and this is very interesting to see. For this moment, this stock is still in a downtrend too, and this stock is also situated not too far from the next support level, and the next support level is this one over here round about this low in circa 67, 68 dollars, and this could be interesting. Yes, at the moment we have a clear short signal. You see this here, this red here arc, this over here, this arrow, it's a short signal, and this short signal is actually a nice bear flag. And for the short term, I expect more falling prices. Increasing prices would be a surprise for me. But when this level over here, maybe the 67, 68, will be a stable level, that the market will come back, this would be very interesting, especially if we'll have a look to the long-term trend here in the weekly chart. And this is quite good to see. When we had here this break up over this here with the strong candle, here the breakup or the breakout, it's better to say the breakout above this high level, it was a very, very strong candle, and we got just a short snap back to the downside. And this level over here is quite interesting here, 67, 68, it's the low of here. This is one very important level. And the second one that we see here in the weekly chart is the area over here, this one here, the base situation, and this base pattern too. You see here, it's similar like a candle, and not a candle, it's a handle, it's a cup with handle over here, something like this. This is a quite good base pattern, and the rally is speaking for itself. So this is what we see here, and when we have the chance to see a base pattern, maybe anywhere here in the 67, 68, or later at the 62 roundabout, this could be a good situation to invest. This is an investment, not a short-term trade, just an investment for the next months. When the wood market will come back, we will have a good chance to go up here. And what you see here, the next resistance level is here in this area, so round about 78, and the next levels from this downtrend over here that we can find as a level where buyers would wait are at 81, and here 80, round about 83.50, 84, and then it's the way free to the new high. So this is very interesting. It's crucial that lumber will come up again, and then will we see that these stocks will gain again. And yeah, these are my insights, my thoughts for today, and I give back to the moderation. I think it was Martin, right?
Yes, it was me. Okay. Well, thank you very much, the three of you. This was really, really great. I liked your setups very much. Oh, I see. I just lost the... okay, there it is. Let me take the screen for the final words. Okay, I hope all of you had fun here with this webinar. I think it was something for everybody. Very, very nice trading setups for the long side. Mostly, I think this is because markets are still in a valid uptrend, still moving up higher and higher and higher. And as long as we see the markets on the long side, I think most of the time the setups you get presented here are for the long side, as the most of us are trend followers, because this is the most easy way to earn money in the markets. Just follow the actual trend, and we try to help you figure out good trading ideas for the coming week. And I think there were a lot of good setups that you maybe can profit from. Yeah, would be very nice to see you here again next week on Monday again. Oh no, next week I think is 4th of July, so we have a free day next week. But in 2 weeks on Monday we will back for you. So this is not correct, next Monday, but Monday in 2 weeks. So take care, have a great trading week. We wish you profitable trades, and see you next time here around. Bye-bye.
Thank you.
Bye.
Bye.
Next
Bye.
time. Bye.